guys, Jack Leeson with MajorLeagueTrading.com, and I'm going to be going over a trade I took today here in Nadex. I'm currently long about 300 contracts. My average price this trade was $41.33, so just over $42 including commissions, and I'm looking for a total payout of 30 grand here. So my risk on this trade, if you do 41.33 times 300, 41, doing the math here, times 300, so roughly about $12,400. That was my risk on the trade. The trade is going to pay out 30 grand, assuming that the S&P closes above 24.53. Right now it is about an hour till it close, hour and 15 minutes. So 24.43 is all the way down here, so I should be pretty safe in this position. And I just kind of, other than talking about my P&L, I kind of want to talk about and show you guys what made me want to take this trade. So I'd like to back out to a higher time frame here in the S&P 500. I had some bigger support levels at 24.17, and going into yesterday, so Monday, Tuesday, we did have this event, as I guess you could call it, where Kim Jong-un, North Korean dictator, decided to launch some missiles over a Japanese island, which sent the market spiraling lower off the open. And as we moved into the open on Tuesday, I was actually bearish, anticipating this market to go down. So here's the lesson here. If you think one thing's going to happen and that doesn't happen, and we begin doing the opposite of what you thought we were going to do, you probably want to trade in that direction. So I was looking for the market to continue lower and hopefully break these supports, but the bids out of the morning on Tuesday, and that was Tuesday, August 29th of 2017, the bids out of this made me realize that, man, if we cannot fall, if this market cannot fall on news that a dictator is launching nukes over one of the United States allies, it probably just can't fall. That just means we're strong. Right, so as we rallied up, I was able to take a couple of trades in here, but it wasn't until the pullbacks off the open this morning that I was able to decide that I wanted to enter the trade. So in the overnight session, we did get a rally up, and if you look at it, this was the third test of resistance of the Tuesday high. Friday we were front on a little bit, and then we tested that level again. So I was thinking that, if the market was this strong and continues its strength into the day, we'd probably break that level. And this is 7 days of consolidation. That means 7 days of shorts stops are pretty much above this level. 7 days of traders are saying, oh man, if we get above that, anybody short in this area is now wrong and needs to cover. So my thought process was we would get back to those highs. So that's why I chose that 24.53 strike. That was right at those highs, and if we got above them, that strike would be safe. So I was actually able to pick up some nice longs in the futures market, and I'm still holding those. I'm looking to exit just 3 contracts here, 24.62, which is my current intraday upside price target, but I do think that the S&P can actually head all the way back up to really this area of resistance. So I'm looking tomorrow and later in this week for this zone here to trade, 24.73, 24.70 zone. So I'm looking to hold some S&P futures contracts into the overnight session and anticipating that move up. And as long as we stay above 24.53 today, I'm going to capture a profit on the Nadex. But really what I want you guys to take away from this trade is, if you anticipate something happening, if the market looks like it's set up to fall, you have an event like we had where somebody's launching missiles, and we don't go down. Instead, we go higher. Trade in the direction of that reversal. And that's today's lesson. As a reminder, if you like this content, please subscribe, like the video below. Feel free to leave any comments you have. And look forward to seeing you guys in my next video. Take care.